Hey everyone, this is Eric Sunheim with Mercovis Valuations. I'm pleased to be in PP & Co.'s office today, joined by Mr. Tim Euland.
Thank you, Eric. Thanks for coming.
So Tim, why don't you introduce yourself to everyone and tell them a little bit about your firm.
Okay. My name is Tim Euland. I'm a tax partner at PP & Co. I advise private business owners and high net worth individuals on tax strategies. I run our firm's real estate practice group, so a lot of my clients are real estate developers and investors. PP & Co. is a full service accounting firm. You're in our main office here today in downtown San Jose. We also have a satellite office over the hill in Santa Cruz and one in Portland, Oregon.
That's a beautiful space. We're looking right over, this is 87.
That's right.
And we got SAP Center right behind us. And Tim and I have worked in the past concerning estate planning. So I think when a lot of people think estate planning, they think that professionals there are attorneys, but certainly we get involved as CPAs and appraisers. So when does estate planning become operative for you?
Good question. Well, certainly clients who are pushing the estate tax limits, the exemption amount, need estate planning because they could be subject to estate tax. But really, when we're talking with our clients, we feel that anybody should have a basic estate plan, whether that's typically a will, a trust. They should consider life insurance, just to make sure that their assets, if something were to happen to them, were to pass how they belong in accordance with their wishes.
Well, yeah, you want to avoid probate at all costs. So, do you want to explain briefly to people at home? This is, even if you're under what we call the estate tax exemption, sometimes called the death tax. That was a term coined by Frank Luntz, who I actually met in DC when I was in high school. What is that exemption and how does probate work? Okay.
Well, currently, thanks to the Tax Cuts and Jobs Act of 2017, we're looking at a historically high estate tax exemption. I think it's 13.61 million for 2024 for an individual. So
it's inflation adjusted, so it changes.
That's right. So for a family, you're almost $28 million. So it's a pretty high number, and not as many people are subject to estate taxes right now. But as you know, like many provisions of the Tax Cuts and Jobs Act, the enhanced estate tax exemption is set to expire at the end of 2025, which would cut that number in half. So it becomes irrelevant to a lot more people.
Absolutely, yeah, it will sunset, and we don't know what that number is going to be in the future. So it makes it hard to do some of this planning to make these decisions of, okay, well, should I start planning like I'm going to be affected by the death tax, or am I going to be exempt from any taxes when I die?
That's right. That's right. And the probate question, I'm not an expert in probate by any means, but if things go to probate, that generally means that the court's going to decide what happens with your assets, as opposed to what and that may not agree with what you want to do, which is why it's important to have a trust or will outlining where you want your assets to go.
Or even if it does agree, it's going to take time.
That's right.
Anything involving the government is going to be lengthy, costly. So if you can put your assets into a trust, you can bypass that whole process of probate. I'm by no means a probate expert either. Basically, though, I do know it's something you don't want to go through, and you don't want your heirs to go through it.
That's right.
So pretty much anybody who has a dollar to their name wants to have, will, a trust, power of attorney, these set up in case something bad happens to you, and so it'll make things easier on both you and your family in the event of your passing or disability. But then there's also kind of more advanced estate planning where we get beyond the attorneys, say, and the accountants and the valuation professionals get involved. So let's talk about somebody who died and maybe they own a fractional interest in a property or they own a business. Even if it's below the estate tax exemption, what's been kind of your involvement with that?
Okay. Yeah, that's a good question. So most of our clients own either private interests in businesses or real estate that they've built. So, and in many cases, that's the main source of their wealth, right? So when they when they pass away, they could fall into one of two categories. They could, what we would get somebody like you involved to value those assets to determine what the value of their gross estate is, right? And depending on where that is, that may mean that they need to file an estate tax return. It, or it may mean that they aren't at that level where they need to, but you certainly need to understand what the value of that is and have the support in your files.
Got it. So 706 is another term for the estate tax return. And if the person's dead, who's filing that?
Well, typically there's an administrator or an executor of their estate who's helping to gather their assets and work with their advisors. Sometimes attorneys will file an estate tax return, but more often than not, that's something they look to us as to file on their behalf.
Got it. So you're helping then, now the estate is technically your client rather than the individual.
That's right. And at that point, we are working with whoever the administrator or executor of the estate is.
Got it.
Usually pretty closely with an attorney who helped design their estate plan over time, as they're familiar with how they expected things to play out.
Okay. So that's the beginning and kind of intermediate. If we're talking about a very wealthy client who's, for sure, whatever the exemption is, going to come in above that, how do you get involved in helping them plan for perhaps avoiding the estate tax?
Yeah. So, so like I said, many of our clients are private business owners or own real estate, and those assets have grown over time and are a major source of their wealth. So a pretty common estate planning strategy is to give minority interests in those assets to family members, either via trusts or family partnerships over time. For a number of reasons, they can be transferred at a discount. It allows those assets to appreciate outside of their estate potentially. But it's important to note that when they do that, like at death, the value, the assets have to be valued properly. They can be, as you know, discounted for lack of control or for being a minority interest, lack of marketability, and these need to be disclosed on a gift tax return, and it's really important that you're working with somebody like yourself to do that properly.
And that's because it's, even though you're not dead yet, you're still using up your lifetime exemption.
That's right.
And you're using it now, based
That's
on
right.
the value now.
That's right.
And what Tim's talking about in terms of these discounts is if you have a $100 million business, you can give 10% of that to your kid now, and that 10% may be worth less than 10 million because of these discounts. It's a fractional interest. So it might be worth 7 million based on these discounts for lack of control and lack of marketability. So you can reduce your estate tax both that way and by using the value today versus the value when you pass, which is presumably going to be higher.
That's right. And there's an important rule. The IRS has an adequate disclosure requirement for lifetime gifting, which is really important. And it basically says that if you file a gift tax return reporting the gift and it's adequately disclosed, the IRS, after the statute of limitations for that gift tax return is passed, the IRS can't come in and challenge the value of the gift as reported on the return. So there's a lot of things that need to be reported to meet the adequate disclosure requirement, but one of the main things is that if a valuation is done with the correct language and the correct methodology, and that is attached to the gift tax return, that satisfies the adequate disclosure requirements. So that's where we're working with somebody like you as well.
Perfect. So that's where things start to get complicated. If you have more questions about this issue, please do reach out to Tim or myself. We'd be happy to assist you and connect you with estate planning attorneys who can also assist in these matters. Again, I'm Eric Sunheimer, Covas Valuations.
Tim Ulan with PP&Co. Thanks, Eric.
Thanks so much.